So just so I can kind of get situated by way of background, or just show of hands, how many people have heard of equity crowdfunding in this room? Oh, okay. That's actually a pretty good amount. What about the Jobs Act? Okay. All right. So actually pretty good showing. So Seed Invest is a leading equity crowdfunding platform. We're based in New York City. Yeah, I thought I'd just start out by giving you a little bit of my background and how kind of Seed Invest came to fruition. And then I'll tell you a little bit more about the Jobs Act, what has actually changed. It sounds like a lot of people are familiar already, which is good, what we're doing at Seed Invest, and then kind of where I see the market going and why I think it's going to be a very interesting next couple of years for this industry. Does anybody think they know what this is on this chart? Any ideas?
Small business lending.
This is actually has to do with my background, so it's probably gonna be hard. But this chart shows the stock of Lehman Brothers, and the yellow line shows you when I was there, and then the red line shows you after I left. So, it's actually like 95% R squared in terms of the correlation of what happened. So timing's everything. I was really fortunate. I started a group called Leverage Finance in the investment banking division at Lehman. I left on June 1st, 2007. Literally the next week, when I was taking a month off before moving, the first deal, U.S. Food Service, couldn't get syndicated, and literally everything started to kind of fall apart after that. So I was very fortunate in terms of my timing. That's where I started. And then I basically, after Lehman, I went to a private equity firm that's based in New York called Wellspring. We managed about $3 billion investing in middle market companies. And I actually had a really good gig. That's me flying private. We flew private most places. And I didn't have a bad gig. Pay was pretty good. I was there for 3 years. It was very interesting. Not a lot of complaints. However, when I was at Lehman, and even when I was at my private equity firm, I always just had this kind of burning sensation in my gut, and I always kind of wanted to start my own thing and be an entrepreneur. And I got to the point where I was kind of post MBA on the partner track, but I knew that if I didn't kind of make the jump then, that it would never happen, and I'd always regret it. And so I was the first person, I think, in the history of the fund that was around for about 17 years to actually leave without getting fired. And then I started. I didn't have the idea at the time. These are a couple of the really crappy ideas that I've kind of had over time. You can see a travel planning site, a food ordering mobile app, and even a hangover cure. So I had all these ideas that I'm really glad I didn't kind of pursue. But I wanted to do something. I didn't have the idea at the time. So I did the next best thing, which was going back to business school. And that's kind of where I finally found the problem that I was kind of going to solve. And this was kind of it for me. When I was I went back to Wharton, and I came across a lot of people like David who had awesome ideas. Luckily, he was able to raise really good financing from strong VCs, but he's definitely a rarity. And there are dozens of pretty promising entrepreneurs who literally, because they couldn't raise capital, they threw in the towel before they even got started. And then I also, just like David found, I found this tight-knit community of people who would love to invest a little bit of money to fund people that they know in their community. And at the same time, around 2010, 2011, you had donation rewards crowdfunding sites like Kickstarter that were taking off. They've now funded $1 billion with thousands of people basically donating $50, $100, $200 to get a product or to kind of have your name in the credits of a movie. And so this emerging trend was happening. And I came across two guys back in my second year in 2011, one named Woody Neese, another named Jason Best, who had basically looked at what was happening with Kickstarter and thought, why can't we do the same thing with equity? Why can't we raise small amounts from lots of people online and give away equity in our companies? And they basically ran into 80-year-old U.S. securities laws. And most people would have kind of shunned away at that, and they actually came up with this framework to change 80-year-old U.S. securities laws, took it to D.C., and when I came across them, they've been lobbying for about a year. And this chart to me kind of says what the problem is, really simply. It's that if you look at our country, about half of jobs and GDP come from startups and small businesses, and despite that, about 1% of our savings goes towards startups and small businesses. It largely goes to large public companies. And so that to me kind of says that the system is broken. Basically, in late 2011, I connected with the guys I mentioned, Woody and Jason. We ended up getting this bill called HR 2930, the Entrepreneur Access to Capital Act, approved in Congress in November 2011 by a vote of 407 to 17, which is pretty miraculous in this day of age, getting a bipartisan vote like that. So all of a sudden it had legs. And then we ended up getting that rolled into what's now known as the Jobs Act that was signed on April 5th, 2012. And so basically took the Jobs Act and started Seed Invest as a platform to leverage the changes. And I know everyone's familiar with it, but just very high level, the really big changes are that anybody who has raised money historically under what's called Reg D. In Reg D, there's about $1 trillion a year that's raised under Reg D. Almost all private fundraising happens under Reg D. It's a fascinating exemption to having to raise money as a public company, but there are really, in my mind, two very big restrictions that have been around really since the Great Depression. The first is that you cannot generally solicit historically. So if you're raising capital, whether you're a startup or a hedge fund or a venture fund, you can only raise money from people you have a pre-existing relationship with. So if I was in this room and I was telling you that Seed Invest was raising money and I hadn't met all of you before, that was technically illegal. So you're really raising money in a bubble, and as a smaller company, that's very, very challenging. And it also has kind of meant historically that you really couldn't leverage the power of the internet because the internet is really a public medium. So that has actually changed. Title II of the Jobs Act went into effect September 23rd of last year, and we have hundreds of companies on Seed Invest that are publicly raising capital. They're tweeting about it. They're kind of sharing, spreading the word to everyone they know. So we're seeing really interesting things on that side. And then the last piece, Title III, which has not kicked in yet, I'll kind of revisit at the end, but it will basically open up raising money privately from today, kind of the 1% of the country to 240 million new Americans, so the other 98% of the country. I'll talk about that in a minute. I'm sure people have questions. But so that's the Jobs Act. In terms of Seed Invest, what we really did is we took what's happened privately offline for 100 years and moved it online. And that's accomplished a couple things. It's made things a lot more streamlined. So we really, at Seed Invest, we've made investing in a startup company as easy as buying a share of Microsoft. So all the due diligence happens online, and when somebody's ready to make an investment, in the private world, it can take weeks to send out legal docs and get signature pages faxed or mailed back to you. It can take a lot of time herding cats in terms of chasing down checks or wires, and so all of that happens in a very streamlined process that can take 5 minutes in order to invest in a private company. And it's also opened it up to a bigger pool of investors and companies. So we now have aggregated, over the past year and a half, close to 4,000 accredited investors who are looking to collectively invest about $160 million into startup companies. These are all kind of examples of, you can't see it very well, but companies that we've funded in the past year. And in March and April, we did about $6 million of funds raised for companies on our platform, which in the startup world is pretty meaningful, and it's growing nicely. This is just an example of a company we helped raise capital for about 2 months ago. It's called Virtuix. So some of you probably heard of Oculus Rift. Oculus Rift is a virtual reality headset. They were acquired by Facebook in March for $2 billion. This company, Virtuix, basically pairs with the Oculus Rift headset so that when you're playing, and you can see the picture here, this was a demo day in our office. We had the only prototype on the East Coast. And this is a VC named Lou Kerner who who came by, and he's basically is playing the video game on the Oculus Rift, and instead of using a controller, it's basically a circular treadmill. So you're moving around, you're controlling everything while you're playing. So it's pretty incredible, and it has a lot of other applications. And so this company basically came to us in February, and then over 2 months they were able to pretty quickly raise $3 million. About a little over half of it came through our platform. And it kind of was so successful that people like Mark Cuban came in at the last second and invested $250K, and we got a couple venture capital funds in. And this is all kind of something that would have been very, very difficult offline, and it could have taken another 4 to 6 months to actually complete. So, the value that we provide to entrepreneurs is help them raise capital, but also help them raise capital quickly so that they can focus on what's actually important, which is building their business and not fundraising. And then this is pretty new. I haven't actually spoken about this at all publicly, but we actually used our own platform to raise money a month ago. So we've kind of been asked by a lot of people over the past year, you should use your own platform. Would you ever open it up for investing? So we did just that. We were the first equity crowdfunding platform to publicly raise money on its own platform. So a little over a month ago, we announced that we had raised $2 million of venture capital money, and that we were opening up the remaining $1 million to accredited investors on our platform. And we have a pretty big, passionate investor base, and so we were certainly fairly confident that it would work out well, but we were pretty fascinated by how quickly it happened and how many people kind of came out of nowhere who were interested in investing. And so in the course of a week, we had about 3,000 people who read about us raising capital in TechCrunch and VentureBeat and Recode and other publications, who visited our investment materials, and we ended up raising the additional $1 million in a week, and we ended up being, in about a week and a half, being oversubscribed by a decent amount, and we ended up kind of cutting it off just over $4 million in total. So we had a pretty successful raise, and we used our platform, and I'm obviously a believer that what we're doing is kind of the future of investing and raising capital for earlier stage companies, so it was pretty interesting to go through it ourselves. So what's next? I alluded to this earlier, but today, because of where the Title III of the Jobs Act sits, it's still accredited investors only. So that means in order to invest in a private company, you need to either have $1 million in net worth or $200,000 of annual income, and so that's about to change in the second half of this year. Basically, the SEC has to issue final rules, at which time it's basically going to be opened up to the other 98% of the country. And the same thing that we're seeing here in the US is also occurring all over the world. So next week, we're actually going to announce the first kind of cross-border online equity crowdfunding raise. We're partnering with a leading platform in Europe, and we're helping a company who's actually generated, in their first 6 months, they've generated over $5 million of revenue, which is pretty amazing in itself. And we're going to do a joint fundraise on a European platform and on Seed Invest. So I think that is where things are headed. We'll be the first ones to do it next week. Hopefully it'll go well. But it's much more than just a US kind of thing that's occurring. So be happy to talk more about the Jobs Act, equity crowdfunding, any questions people have. Yeah, and if anybody wants to shoot me an email, would love to talk more. It's Ryan at Seed Invest. Yeah.
Thank you for the overview.
Thanks for listening.